Hello, welcome to Market Intel. Today we're doing something slightly different. We've got less of a focus on volatility and more focus on price action. The question today is, what does the historical data tell us about price action after hitting an all-time high? And how can we apply that data to current price action? Just a quick reminder, I'm not a financial advisor and this isn't financial advice. So we're on the monthly time frame and we're looking at monthly closes only, not wick highs and lows. And I'm defining an all-time high, in terms of like a 3-month rule. If it's the all-time high within 3 months and there's no new all-time high, then I've locked it in there. Same goes with the macro low. It follows a simple 3-month rule. I've applied these rules across Bitcoin's history all the way back to 2011, and I collected the data, such as, generally just the duration and the percent price change. What I've discovered is that we do get a range of results. There are some that are quite shallow, but then the median is actually deeper than what you might think, and the worst cases are extremely deep. But what really matters, I think, are the ranges, which we'll get to in a short while. The drawdowns vary widely in length. Some resolve within a few months, others persist beyond a year, and it actually splits into two, the data. We do have like a group that is shorter, that's less than 6 months, and then a group of drawdowns which are longer, more than a year. But the duration isn't generally related to the price. And what we can do is take this data that I've gathered and apply it to the current price action. You can see that, current structure of the price sits right at the top of the box, and we kind of almost appear to be on a bit of a cliff. We are right at the top of the historical outcomes. We're not trying to make predictions, but what we're looking at is what typically happens in history, and this zone represents, the highest probability zone based on the historical data. We've also overlaid a Fibonacci here based on the 2022 low to the most recent all-time high. And it just provides some structural context. And I think it's interesting that the median sits not too far off the 618 level there. So using this, we can set out two potential scenarios based on the historical data. And I think scenario number one would be a long drawdown, one of those drawdowns that take us over a year. And we could even go all the way down to the median here, maybe a little bit lower. We've got the 786 here at 37K before hitting that macro low. Scenario number two is that we could have potentially already seen the low. This close here at $87,500 could potentially be the low. It's hit the median in terms of drawdown completion time, but it hasn't hit the median in terms of the price change. It is very shallow, but it is within the historical data. Both scenarios exist, as historical possibilities, with a small caveat that these shorter drawdowns do generally happen more than the longer ones. I think it's 60-something% of shorter drawdowns compared to 30-something are longer. So, this isn't telling us what comes next, but it kind of tells us what we might expect, and where we are within historical outcomes. And the more monthly closes that hold above this last monthly close, the more likely it is that we've seen the low, that the low is in. I'm not saying that it's definitely in, I'm just saying that it's within the range of possibilities that we've seen in the historical data. If this framework has been useful for you and you like to see more of these macro Bitcoin videos, feel free to like and subscribe. The next video I'll be doing will be moving on from this to what happens once you've hit that macro low to the next all-time high. Thank you, and I'll see you next time.